People, what's going on? What's going on? What's going on? This is your boy Bobbie from Mentourme.com. Today we're going to talk about this whole Bank of America zero down program. I'm going to break down a couple parts for us to get a better understanding. As you guys know, I'm a wealth practitioner. I teach you guys how to create wealth while living. And so it's my duty to always let you guys see things in different dynamics when it comes to, by theory, opportunities. As you guys know, Bank of America just released what we call a zero down program. And a lot of you are DMing me, Bobbie, can you discuss a little bit? How beneficial is it? Do you recommend it? What's the pros and cons? So I'm going to talk a little bit about that today to kind of give us insight on how is it going to benefit you? Does the bank lose it all? And how does it really work? So let me let everybody load up on. I got people on Facebook, YouTube, IG, all that good stuff. And we're going to really dive into this thing. 1 second. Let me get my AC down before I even get into it. Cool. All right. All right, people loading up, which is good. People, make sure you put your comments below. This is your boy Bobbie from Mentourme.com. My goal is always to teach you guys financial wealth while living. Now, one of the things you guys know about, I love talking about owning assets, owning real estate, owning a business, owning things that bring money in your pocket, owning things that bring wealth in your life. Today, I want you guys to understand Bank of America, one of the biggest banks in the world. I'm not going to say it's number one, but it's one of the biggest banks because if you guys really want to get technical, one of the biggest banks in the world is probably SoftBank, which is a Japanese bank. But at the end of the day, Bank of America has just released this opportunity for Hispanics and Blacks in certain cities that I'm going to discuss. And the reason they're releasing this opportunity, quote unquote, is for individuals to get a chance to have home ownership. But I really like to pay attention to everything as I discuss things. I like to look at the pros and cons to really give you guys a true evaluation on how I feel. I get it. Okay. Well, when you look at the statistics, Hispanics and Blacks, by theory, some which are called the minority, don't really have the highest percentage of home ownership. For a lot of people, owning homes is a bit costly because nowadays, if you're going FHA, putting 3.5% down or putting 20% down is a bit expensive for a lot of people because several factors. Some people don't have money management skills. Some people are not exposed to the importance of home ownership. Some people just don't care about buying a home. And there's many other factors. Some people feel comfortable renting homes instead of actually owning. And there's just some people that are trying their hardest, but they just can't get the opportunity to buy a home. So what Bank of America has done, which is pretty creative in certain aspects of it, is say, well, here's what we're going to do. We're a multi-billion-dollar bank, and we're going to try to help out people that's not fortunate enough to be able to afford a home. Because we know buying a home can be a bit expensive. Like I said, a 3.5% down, which is an FHA loan on a $100,000 home, which really doesn't exist in the Tri-County area of Florida. But let's say 3.5% on a $200,000 home, which still don't exist, but we'll just use that as an example, would roughly run you about $7,000 down. But you also got to understand, that $7,000 down doesn't include closing costs. Closing costs could be another maybe 3 or 5% of purchasing price, which is for some people that's pretty rough. That's another $10,000. So imagine 7,000 plus 10. Right, by theory, on the high side, you would need maybe $17,000 to buy a $200,000 home. Here's the problem: what happens when interest rates was low and home prices are to the roof? Well, you get situations like what we have now, inflation. So imagine now home prices are still sky high. They have gone down a little bit, maybe 7 to 9%, certain areas, maybe 12%. Now, you got to really think about it. So a lot of people are going to be fighting to buy homes at $500,000. Now, what Bank of America has done is say, I'm going to go a bit more conventional with you guys. Meaning, in a normal situation, if you had to go conventional, you would have had to put 20% down. If the home is a $500,000 home, that's $100,000 down plus closing. which a lot of people don't have. And they also started this because they realized, hold on, there's people that are getting kicked out of certain areas because property taxes have increased so high. And then wealthy people come in those areas and start to buy homes. What I'm simply talking about is what we call gentrification. This is what happens when you're in a particular area and property taxes start to go up. People are probably knocking on your door asking you, would you like to sell your home? Not knowing any better if you own a home or not. Then, of course, the person agrees, get them kicked out, rebuild the neighborhood, increase the property taxes. Then now they, of course, put this area as what we call a middle high class area. So Bank of America said, here's what we're going to do. We're not only going to give you a position where you're going to be in a position to buy a home. You're not putting any money down, okay? We don't even care about your credit score, because how this program works is there's a certification course you have to get approved for. And then from there, it's not in every city. Let's first understand that too. It's I don't know how did that. Let me see if I'm back on. I connect. How did that come through? All right, we should be good to go. So sorry about that. All right. All right, on Facebook and YouTube, we should be back. Sorry about that. I forgot to put my phone on Do Not Disturb. And the call came through. People were talking about this whole Bank of America Zero Down program, and we're talking about the pros and cons about it. First and foremost, I gave you guys an example on what it takes to buy a home. Nowadays, to buy a home, if you have to put 3.5% down on a $200,000 home, that's $7,000. And then if you look at it, roughly 5% of the $200,000 is what will be closing costs, which would really be on the high side. So that's under $10,000. So on a $200,000 home, it would probably cost you $17,000 to buy a home. Now we got to really think about it. We're in an economy where you're not going to find a home for $200,000. You might find one for maybe $500,000 or $700,000 or $600,000. And you could imagine having to put down what we call 20% down. You got to really think about it. 20% down on a $500,000 home is $100,000 down plus closing costs, which a lot of people don't have. So Bank of America said, here's what we're going to do. If you could take our certification course and actually get approved, what we'll do is we'll help you out a little bit. We're going to, of course, put you in a position where you're not going to put any down deposit. We don't care about your credit score. We're going to base this loan on how you paid your bills, your utility bills, how you've been paying your credit cards, how you've been paying other payments other than your credit. We don't really care about your credit score, because you got to understand, Bank of America is not losing in this situation. A lot of people need to still also understand economics. Really think about this. Banks get your money at 0%. When you deposit money in a bank, banks get your money at 0%. They're going to give you the loan, this new gentrification program loan, okay, at market rate. So what that, by theory, means it could be anywhere from 6 to 7%. So really think about this. The same bank that got your money at 0% is now giving you a loan back at 7%. Now, we still don't know if they're rolling the by theory invisible cost that they say is associated with it. We still don't know if they're going to roll that over to maybe the back end of the deal. We don't know that right now. But what they are stating, it's going to be at market rate, whatever market may be, because if we're talking conventional right now, market is at 6%, 5.9. So they can say market is 7%. They can say market is 6.5%. If you really think about it, imagine the bank got your money at 0 interest, now giving you a loan at 6.5% interest. Now, here's another here's another pro for Bank of America. At the end of the day, you have to have insurance on your home. If you guys years later decide, I'm not going to pay for this home, Bank of America, of course, that's why you have insurance, is going to get their money through your insurance. Then you're going to be probably 1099-C, 1099 cancel debt. You're going to get a 1099-C in the bank, in the mail 1 year later for paying taxes on the debt that they didn't collect. They might throw the home in foreclosure, get the difference by a bidding process. So you got to really think about it. Banks have some of the top elite individuals around them to give them guidance on how not to lose in a situation like this. They're not going to lose. The only person that would lose in a situation like this would be you. Now, I want to say the pros because I want to talk about the pros about you actually doing this. If you're in these cities, Miami, LA, Detroit, Dallas, Charlotte, these are the 5 cities that it's currently available to. And you got to really think about it. They're probably using a consensus report to see what's the demographic in certain areas, because this loan is by theory for Black and Hispanics, by theory minorities. Now, if you don't fall in these cities as of right now, you can't even get approved for this. You can't even apply for this. But here's what you guys got to understand. They're also doing something which I find very impressive. You don't have to pay PMI. Now, that's a big game changer. Not only you don't have to put money down, there's no closing costs for you. It's not based on your credit score, so they don't care about your credit. And you don't have to pay PMI. That's a game changer because you got to understand, PMI insurance is an insurance you would have to pay if, by theory, the conventional loan was 20% down. Hypothetically, you put 10% down. Until you reach back to that 20%, you would have to pay this monthly insurance premium fee until you get back to that 20%. Now, here's what's funny. They're waiving that also. This is amazing, people. You got to really think about it. This could really give a lot of you an opportunity to purchase a home. So imagine no money down, no credit score requirement. It's based on your utility bills, how you're making your other fixed monthly payments. That's on your credit report, I'm assuming. Okay. They're benefiting you by, of course, no closing costs, no PMI, and you're buying this home that you would like at market rate, which makes a big difference. For a lot of you that have been crying or complaining that there's no opportunities in this world for you to invest into an asset or buy a home, why not buy now? Because at the end of the day, the only negative, which I can't say it's a negative in such a harsh way, is the market rate interest they're going to charge you because rates are not so low. But at the end of the day, you didn't have to put down a down deposit. You didn't have to pay closing costs. You don't have to pay PMI. It's a win-win situation for some of you that have been wanting to own a home. Now, I'm going to throw some tips in here, right? Because I always want you guys to understand how would I go about this, right? If I was an individual that had this opportunity to buy a home without money down, without closing costs, without PMI, without my credit score, and I want to make sure you guys understand this clear. They made it very clear that if you think you're going to buy this home and try to flip it, it's not going to happen. They made it very clear. I'm assuming, which is not fully stated yet, there's going to be requirements where you have to stay in this home for a certain amount of time. I'm not sure how long. It could be 5 years, 10 years, 15 years. But at one thing they're making clear that this is not going to be a fix and flip that you're going to do. It's not going to happen. And how are they going to control that? That part I don't understand. But again, that's something they will put into their rules and requirements because they want to make sure that this is for people who want to buy homes. Now, look also at another side of this, right? Here's where banks are winning again. When you make a payment, okay, that's an expense to you. That's income to the bank. Now, we all know the truth about banks, and if you don't know, banks don't really service loans for 30 years. They're pretty much going to lock you in this contract for 30 years. Within probably 90 to maybe 120 days, they're going to sell that to a secondary market. So eventually, you're going to get a letter stating that Bank of America or this lender who gave you this loan, it's no longer servicing this debt. The goal is just to lock you in, give you an opportunity to buy a home, which is very fair game. I can't deny the fact it's fair game what the bank is doing. Yes, you might have a high interest rate, but at the end of the day, you didn't have to put no money down. Your credit score doesn't matter. No PMI. You get to buy the home of your dream. People, it's fair game. How could you not, if you're not a homeowner, not take on this opportunity to finally own a home zero down? Shouts out to Bank of America. I've been with Bank of America for some time now, one of my accounts, maybe 12 years. The bank is a great bank when it comes to, of course, lending. Great bank when it comes to a lot of different characteristics of the bank, especially, of course, credit card limits. I'll tell you that. I mean, one of my Bank of America credit cards, I actually posted it. Almost $130,000 or $150,000 credit limit. I mean, I must say, Bank of America does a great job when it comes to, of course, lending. I think for a lot of you who want to own a home and want to really get into the world of home ownership, this program, if you could get approved, is a great opportunity for a lot of us to own a home who don't own homes. Okay, so if you're an individual, you don't own a home, I don't see why you wouldn't try to take on this opportunity, because I think Bank of America is really standing on something, because this really makes a lot of sense in a lot of different dynamics. Because a lot of us know millions of Americans have bad credit. A lot of us know millions of Americans don't have money saved, don't have money in their bank accounts. Some of us have less than $1,000, which is embarrassing, but that's why this program can work for some of you. Now, we all know that there's other programs that exist, such as NACA and many other programs, but what I like about what Bank of America is doing, they're not going to put you through the ringers. You get approved, this is when the process starts, and this is how this game is going to go. I'm assuming in 30 days, you're ready to go. They say it's going to be normal closing time, meaning 30 to 45 days, you're closing on a home. Not compared to these other companies where they're going to make you take courses, put you through the ringer 6-7 months, you still don't have a home. You're still in certification classes. You're still in courses learning how to budget your money. Bank of America is not doing that. And I think it's a great opportunity for a lot of you. Even if they did charge 7% interest, I think it's a great opportunity for a lot of you to win financially, to own a home, to own an asset for you to eventually put yourself in a position of true wealth. People, make sure you put your questions below. Patrick on what is it? Facebook says no flipping home. No, one thing they made very clear: you're not going to buy and flip a home. But if you're in these cities that I'm going to call out: Miami, Dallas, Detroit, Michigan, Charlotte, LA, these 5 cities as of right now is where the opportunity lays. You get to go in Bank of America, walk in, and get an opportunity to buy a home with Bank of America, okay? Zero money down, no credit score is needed. People, where else? No PMI, no mortgage insurance. This is crazy. But people, it's an opportunity. That's why I always say, guys, enjoy the opportunity. I thought I'd, of course, share this information with a lot of you. Appreciate everybody that watches my video. Like, share, subscribe to my YouTube channel, my Spotify, TikTok at Mentourme 954. People, the goal of life is creating wealth while living. Enjoy your weekend. Enjoy your afternoon. Mentour me.